The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the soybean market giveth and the soybean market taketh away. It's kind of what we saw here to start off the week. Monday, we had some good gains. Then Tuesday gave it all back and then some. The wheat trade was a little bit higher, and that maybe helped keep corn somewhat close to unchanged on the day. We were all over the board in cattle. Crude oil hitting fresh 16-month lows on Tuesday. A lot of economic concerns still out there as well. So let's talk about all of it. Joining us now to run through the markets, Tyler Schau with agmarket.net is with us. Tyler, good to catch up with you again, my friend. And how are things up in the Northern Plains? Sounds like maybe a little hot and dry this week in your neck of the woods there in North Dakota.
Yeah, it's we've been dry for quite a spell here, and over the last few weeks, several days touching into the upper 80s and 90s. Got a few more days of that. Looks like it's going to stay hot and dry, which we would always love rain. We always say out where we live that we're never more than 2 weeks away from a drought, no matter how much it's rained. So we'll always welcome it, and we darn sure would like to see some for the grass. But as far as the corn crop goes, it kind of had wet feet to start with this year, was awfully cool through the start of the summer. And so it could use some heat and some dryness for the remainder of September to kind of finish this crop off for us.
Yeah, and I would think too, maybe the soybeans as well up there in parts of the state. I know looking at the latest crop progress report, just to kind of start here, it looks like we're behind a little bit on corn and beans across the Northern Plains, but to your point, maybe some of this heat can help finish things off here before the end of the month.
Yeah, it's going to help on corn and beans. The wheat crop pretty well wrapped up. Canola's pretty well wrapped up in this country as well. So most of the guys would love to see it stay warm, stay dry. If we can avoid a frost in the month of September, that would sure be awesome to avoid any types of issues with corn. But like I said, for right now, it looks like we're going to get that, and that'll sure ease some concerns farmers have up in this country.
Definitely. Well, let's talk soybeans for Tuesday's market trade. As I mentioned at the open there, we had great gains to start the week. We've been seeing a decent rally here in the grains, and then gave it all back and then some. We broke through that psychological $10 level in November beans and closed just below it on the day on Tuesday. It seems like all indications looking ahead to Thursday's WASDE report too are calling for another bearish report for beans and corn in particular. I mean, what's your assessment of that soy complex on Tuesday? Is it a matter of we're squared up positions already? Did I miss a headline? I mean, what gives with giving it all back on Tuesday?
The simple answer to that, and I don't put a lot of stock into the conditions report, especially this time of the year where you expect conditions to move backwards because the crop is literally dying. But the USDA did come in last night with their crop conditions report, and it was basically unchanged on beans from the week at 65% good to excellent. There's a lot of people looking for that to move backwards, especially with the dry finish that we've seen over the last couple of weeks to the crop. So I think for it to show up on paper as no change in the good to excellent, probably got some people thinking, okay, maybe this bean crop is finished or done already, and good enough that the heat and the dryness hasn't really affected it. Personally, like I said, I don't put just a ton of stock into that, especially this time of the year, but just because I don't doesn't mean the market does not trade it. So, we're giving some of those gains back. We do have the WASDE report up that are up on Thursday. The estimates that came out yesterday are for the yield on beans to creep up slightly. I think last month the WASDE had it at 53.2. Expectations are for it to move to 53.3. So that also sets kind of a bearish tone. I would say the bean market has been a little perplexing over the last few weeks. It's got a pretty negative and bearish story staring at it in the face, both domestically and worldwide, just with really large ending stocks compared to where we've been the last few years. And so the fact that we rallied in the face of that was a little perplexing. But the concern or the wild card there has been and will continue to be the managed money position that's extremely short beans and corn and wheat really for this time of the year. And so it's always been the question, at what point do they bail on those short positions? We know last week the Commitment of Traders showed us they bailed on quite a few of them, but they're still short 100 and some thousand contracts. So we'll have to see, which one of those wins the arm wrestling match as we move forward.
Yeah, that's a good way to put it. Kind of that struggle, that arm wrestling match back and forth. And some folks have, as we worked through Labor Day, we were getting that nice rally. And last week we got that nice little rally here in the grains for the most part. And some folks were saying, okay, maybe we've put in the harvest lows early and seasonality's kicking in early here. Do you think that's the case, though? Do you think these markets maybe have another leg lower depending on what the USDA report gives us? I know seasonally, we typically don't see that harvest rally till sometime later in October, right, Tyler?
Yeah, the data we looked at and analyzed, says seasonally we'll see the low in soybeans come sometime in early October. And that's kind of what we've been banking on. So as a company, we haven't recommended that any customers exit any short positions. We've been trying to add to our coverage, moving forward here on that last rally. Kind of one of our long-standing thoughts is in soybeans, you reward a 60-cent rally with something, whether that's a sale or buying put options, selling call options, some type of a strategy that helps manage that. We got over a 60-cent rally from those lows. So we encouraged customers to reward that in some fashion. And part of that was we kind of didn't trust that rally that much just because of those seasonalities that we tend to look at and pay close attention to. Technically we went right up to the 50-day moving average last Friday. It stopped its cold in its tracks. And now today we're going to get a close below the 10-day. So technically also not a good look for the soybean market.
No, not at all. Well, and I wonder too with the corn market, D's corn, pretty quiet on the day, but hovering right around that $4 mark on the board. And I think some of the same, we've put a little rally into corn here too, to maybe give us an opportunity to do something ahead of harvest. But, someone said this to me earlier today in conversation that, a lot of times a pre-harvest onslaught rally, to your point, time to maybe do something there because chances are we're probably going to move lower through harvest before we maybe try to find that seasonal rally, Tyler.
Yeah, typically the seasonality shows sometime late in September, third to fourth week of September is kind of the seasonality where we would see a bottom in that corn market. I know a lot of people were hoping that it came early there, the end of August, and we were just going to keep moving higher. Kind of the same story. There's a downtrend in the corn market that started in late May. And if you draw that to the June highs, and extend that out, we came right up to that showed up the other day at about 417. That stopped the rally there again late last week on corn and its tracks. So technically, there's some pretty big technical objectives that we need to get over, at least on the corn chart, to get us to where we're feeling real bullish this market. I wouldn't necessarily say we're necessarily bearish. I would say with the WASDE report that's slated to come out, if there was one where you could maybe make an argument the USDA walks back a little bit on the yield, we might see that this month. I don't know that it's something to go run and buy up corn futures or buy call options just based on that. The expectations is yield's going to come down to 82.5, whereas last month it was at 83.1. And I'm not going to even venture the number because I'll forget it, but I think Pro Farmer was a bushel or two lower than the WASDE expectations last month. So a lot of people thinking maybe we'll see that come down. Of the three grains, I would say corn has the least bearish supply situation. I wouldn't say it's necessarily bullish. We're still looking at almost a 2 billion bushel carryout. So got a lot of headwinds on that crop fundamentally.
Tyler Schau with agmarket.net is our guest analyst here today on Market Talk. And I wonder, too, before I talk energies in the outside markets, and I want to get some thoughts there, but with wheat, we were talking weather earlier. Spring wheat harvest is mostly getting wrapped up. From what I've heard, Tyler, a lot of folks finding some fairly impressive spring wheat yields. Some issues really comes down to hybrid selection. Some issues with falling numbers and things like that, and Don and you name it. But overall, it seems like it's been a pretty good crop year for spring wheats in the Northern Plains and up into Canada as well. What have you heard, being there in the heart of spring wheat country? How are things shaping up here as we wrap up spring wheat harvest?
You know, it's really a tale of two different areas of the state. The eastern part of the state, as you get into that James River Valley over into the Red River Valley, hearing more talk of low quality, low protein, high vomitoxin, some falling numbers, some issues with that crop. For the most part, decent yields, in a lot of cases, really good yields, just poor quality, which is always a struggle when you're a producer. And I can understand those struggles. As you move west and north, man, we're hearing some really, really large yields, and in certain pockets, not only large yields, and we're talking 20 to 25 to 30 bushels above APH. We're also seeing decent protein levels and good quality. So it a lot of that depends. Some producers chase the bushels in lieu of yield. I was speaking with one yesterday, and he said that my goal is always try to bushel as high as I can, and I'm okay taking the discounts if he said I'll take a 10% discount with a 20% increase in volume, and he's got that penciled out. I've got other producers that chase the protein content, and so they're very selective on their hybrids and their management practices. So it's going to be a producer by producer case. I don't like making large scale assessments of what's going on, but for the most part, big crop of spring wheat, which is really kind of flown in the face. I'll be right honest. We were pretty bearish wheat because we knew, or we felt like there was going to be a big slug of wheat going into market, and maybe got caught a little bit offsides over the last couple of weeks with that strong rally that we saw.
What about basis up in your neck of the woods? I mean, as we're getting a lot of this big spring wheat crop off in particular, and just thinking about this cash market, I mean, this is something we've talked about, off and on here throughout the year. How much is of any of the crops going to move into on-farm storage? How much is going to town, off the combine, etc.? I mean, any big notes for you basis-wise to keep an eye on right now, Tyler?
The producers up here aren't going to like what I say here. Basis really isn't surprising me this year, with the high production numbers we're seeing on top of a really big production level last year, right? Where one of the things that this isn't a farmer, it is a human issue. We tend to look back to what's happened the last few years and kind of anchor to that. And if you remember, in 2021, we had a extreme drought. A lot of places, had 20 to 30% of APH, and basis screamed. Saw zero basis, positive basis on wheat. It was the heyday for the basis market. It stayed strong in 22 and really stayed pretty strong to start with last year. We were still trying to catch up. Last year's big crop, coupled with a big crop coming down the pipe this year, has taken that, what was, a zero basis, 10 under, 20 under, 30 under, and it's bumped it to, in a lot of cases, 90 under for spot delivery, 80 to 75 under for, November, December delivery around the state, which is poor historically, but not surprising given the two big crops that we've seen over the last couple of years.
All right, let's talk energies and macros. I know crude oil continuing to move lower, 16-month lows we hit on Tuesday. How much is that lower movement in crude impacting commodities? And coupled with that, too, the macro markets, I know we're going to have plenty of inflation data out here later this week. The Fed meets next week. We presume they're going to make interest rate cuts. So it feels like things with the economy, the macro markets, energies, they're playing a role. What's your thoughts in the outside markets right now, Tyler?
Yeah, they're definitely playing a role. I saw that OPEC, they came in and lowered their forecasts really for the second time in the last 2 months on energy demand worldwide or globally. That's really weighing heavy on energy markets. On top of that, you've taken out a bunch of technical objectives, taken out your lows, taken out some downtrends. So, I mean, it's just not a good look on the energy side, and that's going to spill over into everything. And that's one of the things that a lot of our bushels now, corn and now soybeans, are literally crushed to go into that energy market. So when the competing product that they're going against is dropping in value, that does little to increase the demand for corn to turn into ethanol or soybeans into renewable diesel as we move forward.
All right, let's turn our attention to livestock trade. As we saw, I was scratching my head with that cattle market on Tuesday, Tyler. I'm not going to lie. At 1 minute, I look and we're up triple digits in feeders. The next minute, we're down 50. Then we're back higher. We settled up a little bit lower in fats and a little bit higher in feeders. I mean, I don't know what to make of it. Do you have any thoughts on Tuesday's cattle trade?
Man, I would say there's a long line. You can join the club on trying to make sense of the cattle markets here. Some days it's easy to go, well, the stock markets were down, the financial markets were down, that's pulling the cattle markets. And then the very next day, the financial markets are up and the cattle markets are still lower. So that's made things very difficult. There hasn't been a lot of rhyme or reason. I can tell you this, the long-term charts don't look friendly to cattle, feeder cattle or fat cattle. We violated some trend lines that have, been working for 4 years now. And so when you take out some uptrends on the monthly charts that have been in place for 4 years, that's not a good look technically for cattle. Now, I will say fundamentally, we know the numbers are tight. That's not changing. I think one of the things that's popping up is a realization that the packers are importing beef. We're seeing record imports from Brazil and from Australia, and I know that's got a lot of producers upset, rightfully so. But that's one of the things I like to remind people as much as I can. I'm a former economics teacher, and probably the simplest way to understand economics is high prices cure high prices. It discourages people from purchasing the product, and it encourages new and additional ways to bring that product to market. And so that's really what's going on here. We're finding ways to make up for the shortfall in domestic supply. We're feeding cattle heavy, and we're bringing some in from other places. And that's just making the technical picture kind of deteriorate right in front of our eyes.
Yeah, that's a good thought. I think I could kind of group cattle and hogs together here in this window, just trying to find fundamental support in the entire protein complex, and just doesn't seem to want to be out there right now. It just seems like technical moves here and there, and that's really it. So, as we get into this fourth quarter too, it'll be interesting. I'd say holiday demand is probably the next thing for me on a consumer level here domestically that I would be watching for, that maybe could have an impact in these markets, but largely it just feels like we're just kind of, to your point, trading charts right now. It seems like.
Yeah, it's very technical, and like I said, the packers. It's constantly a battle between the producer and the packer.
Yeah.
For about the last year and a half, the producer had the upper hand. But the packers got a lot of weapons and tools in their toolbox that they're I don't like the fact that I say this, but it's generally not a good group to go up against or to bet against. They'll find a way to get the leverage back, and that certainly feels like what they've done in the cash market.
No, I would agree with you there. Unfortunately, it's a tough situation at times. All right, let's wrap this up here today. Good stuff as always, Tyler. Final thoughts you would have? Anything you want to share, reiterate to producers listening in here today as they're thinking about their marketing right now?
Well, I mean, on the livestock side, cattle side especially, don't lose track of the forest because of the trees, kind of a deal. If we go back just even 2 years ago, and I told you could sell November feeders at 230, you'd have been doing cartwheels. So there's still ways to manage that risk. I'm not here telling you it's going to go lower. I mean, it very well could. And as best broker speak as I can give you, it could go up, could go down, could stay the same. but I don't think some risk management is a bad idea. And I've been saying that for seems like 18 months now, like a broken record. And I still don't think some risk management here is a bad idea. On the grain side, like I said, we've been using the rally the last week as kind of a place to make some catch-ups for people that just kind of didn't want to do anything. And now we're looking, okay, now they do come to the realization they do have a big crop. And so they want to make some protection on, option volatility has decreased. So options have gotten cheaper. We're not even looking at selling any options over the top of it, just going in and buying some options and getting covered, especially ahead of a WASDE report on Thursday.
Good thoughts as always. I know folks can reach out to you and the rest of the team there if they have questions and want to talk about their marketing plan. agmarket.net is the easiest place to start. With that, Tyler Schau from agmarket.net. Always good to talk with you, sir. Thanks for joining us here on Market Talk today. Appreciate it.
You bet. Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.